With so many buyers still sitting on the fence, waiting for interest rates to drop before they throw their hat in the ring, I advise strongly against it. I'm Mark Jones, host of Key Factors Podcast, Real Estate AF, president and senior loan officer at I Think Mortgage, and co-founder of ReviewMyMortgage.com. And I want to briefly go over the consequences that you may be facing by waiting for interest rates to drop in order to lock up a home for purchase. But first, let's take a look at what market trends are happening in San Antonio and surrounding. So here we have Texas housing market trends and predictions for 2024. So starting with home sales, the Texas housing market has shown a significant rebound in April of 2024 following a decline in March. Seasonally adjusting housing sales have increased, driven by rise in new listings for the fourth consecutive month. This recovery has resulted in 29,212 homes sold on a seasonal adjustment basis, marking a 5.9% increase month over month. San Antonio saw the highest recovery among major cities, with 8% increase in home sales, bouncing back from 9.2% decline. Dallas experienced 4% increase, and other major cities saw a slight increase in sales. The upward trend in housing sales indicates a strong demand for housing across Texas, supported by a robust labor market and economic strength. Texas home prices. Despite fluctuation in sales, home prices in Texas have remained stable. The median home price in the state has held steady at approximately $340,000 for 2 consecutive months. Austin experienced a notable increase of 5.1% in home prices, with a median sales price rising from $421,572 to $443,247. Houston saw a 2.1% increase in home prices. Dallas had a modest 0.7% increase, and San Antonio is the only major city to experience a decline in home sales, falling by 0.9%. Now, you're probably wondering why such a decrease in home sales in San Antonio over the past several months. Well, the top reason, as a mortgage loan officer, that I'm hearing on a daily basis is I want to wait for rates to drop before I throw my hat in the ring. Let's talk about that now. So I put a prompt in here for ChatGPT to kind of give me a guide on whether or not this was valid. And the question or prompt that I give is, what do you think will happen in housing market of San Antonio, Texas, if rates were to drop from 6.875 to 5.875 based on the data that you can find online? Okay, so reason number one. So it says, number one, increased buyer demand. Lower mortgage rates generally make home financing more affordable, leading to an increase of buyers' interest. With rates dropping, monthly payment for homes becoming more manageable, which can attract more first-time home buyers and investors into the market. So as I look now at number two, potential rise in home prices. As demand increases, home prices may start to rise. This is because more buyers will be competing for available homes, potentially leading to bidding wars. The current market trend suggests even a slight decrease in rates could stimulate price growth, as seen in similar markets. In number three, inventory levels and market activity. The San Antonio housing market has shown a balanced inventory level with a significant number of active listings. If rates drop, the increased demand might lead to quicker turnover for available homes, reducing the time properties spend on the market. This can also encourage more homeowners to list their properties, thereby increasing the overall market activity. And number four, balanced market dynamics. While a rate drop would increase demand, the market's current balance between supply and demand may prevent prices from skyrocketing. However, areas in San Antonio with higher desirability might see more pronounced effects on pricing and competition. Overall, a drop in mortgage rates would likely lead to more competitive market with higher buyer activity, potentially driving up home sale prices and reducing inventory levels in the San Antonio area. However, the extent of these changes will depend on how significant the demand increases relative to the supply of homes. So what does that mean exactly? If you as a buyer currently are sitting on the fence waiting for interest rates to drop based on supply and demand, we more than likely and highly likely will see a huge increase and influx of buyers jumping into the market to capture their deal. At that point, it would remind me slightly of 2020, where we had multiple offer situations on every priced home under $300,000, thus making the buyer pay more for the home than it actually was worth at the time. This will increase home prices dramatically, whereas you could be the individual that purchased prior to the frenzy, secures your home price for the right sales price, and once the actual rates come down, you refinance. Very simple concept. But there are many that are not understanding this and will likely face bigger issues when jumping into the market at a lower rate by waiting. So I'm hoping, based on this basic information of supply and demand, utilizing artificial intelligence to prove my message, that if you are out there shopping for a home, maybe you've been pre-approved with your lender and the payment at the moment was just a little too high, I would advise you to revisit those options as soon as possible. As we lead into the presidential election, I don't foresee interest rates dropping anytime soon. We're looking about 6 months to a year down the road, and it'd be a great time to start building equity in the home that you can actually refinance instead of fighting over properties in multiple offer situations and overall overpaying for that property. I'm Mark Jones with I Think Mortgage, and I hope this message goes far and wide.